Hello. So today we are going to take a look at the profit and loss statement of Zydus Lifescience Limited. This is one of the largest pharmaceutical companies in India. So let's take a look. All right. So this is the consolidated statement of profit and loss for the year ended March 31, 2025. All right. So fiscal year 2025, all these figures are going to be in millions of rupees. So that can be a bit confusing, but they're going to be in millions of rupees. We are going to look through this entire statement, so all the way from revenue from operations. We'll take a look at the expenses, which expenses are the largest and all. And we're going to go down all the way to profits. We're going to go through the other comprehensive income or other sources of income, and moreover, we are going to look at some of the notes. These notes, you can see notes. These notes provide more information about some of these numbers, basically. So we're going to take a look at some of these notes. Okay. So this is for fiscal year 2025 or year ended March 31st, 2025. All these numbers again are in millions of rupees. Okay. So first, we have revenue from operations. All right. The first that we have is revenue from operations. Here you can see it's coming around 232,415 million rupees. That's 23,000 crore rupees in crores, you can say. So this is the revenue from operations, which basically means how much money did the company make from, well, its operations. Then we have other income just below revenue from operations, a very small 2,695 million rupees. This is basically money it made from sources other than its main operations, like interest the company earned on some of its deposits with the bank, right? Stuff like that, basically. So here we have the total income coming out to be two uh, 2,35,110, what do you say, million rupees, or 23,511 crore rupees. That's the total income for fiscal year 2025. Now let's come to the expenses part. Very interesting. Now in expenses, there seems to be around three major categories, three big and fourth slightly smaller category of expenses, which, okay, whoa, yeah, of expenses. Okay, so the first expense you're going to look at here, it shows, is the cost of materials consumed. It's directly under my, you can say, video box. So cost of materials consumed is around 43,729 million rupees. You can say you compare it to the total revenue, and it's like almost equal to 20% of total revenue goes to cost of materials consumed. So cost of materials 20%, almost close to 20% of revenue. Then the second expense is purchases of stock in trade. Purchases of stock in trade coming around to 21,500 million rupees. Now you may wonder, what is purchases of stock in trade? I was also confused, so I asked ChatGPT, and it tells me purchases of stock in trade. So purchase, Zydus Life Science is purchasing stock in trade. The keyword here is in trade. Basically, these refers to purchases of goods that Zydus Life Science has bought for reselling, right? For example, like Zydus Life Science makes a lot of it drugs, but with the drugs, let's say it may also want to sell a kind of a toolkit, right? A toolkit it does not make, right? To provide like a more comprehensive package or more products. So it will have some third party company manufacture that toolkit. It will buy that toolkit from that company and then sell it to its customers. That example may have been wrong, but basically, purchases of stock in trade refers to goods which Zydus Life Science has bought just to resell. All right, that's all this is. Stock in trade. Trading is occurring, buying and selling, not manufacturing. So this is the second major expense. Not the major expense, but this is a smaller one in comparison. Like it makes around 10%, almost 10% of total revenue, right? purchases of stock in trade. Then we have changes in inventories of finished goods, work in progress, and stock in trade. This is negative. It's under brackets, as you can see. It's under brackets 1,849. But here in expenses, it's under brackets. So it means that it's being added. All right. It's being added to the profit, basically. Okay. This is not an expense. If it's negative in expenses, it means it's a positive for the income. If that makes sense. It's positive for profit because it's negative in expense. All right. Then we have the employee benefits expense, 36,805 million rupees, the second largest. Here we can see after raw materials, we have again employee benefits, and then we have purchases of stock and trade. Then finance cost, interest cost, 1,659 million rupees, extremely small, not even 1% revenue. Then depreciation and amortization cost. These are non-cash expenses, meaning these do not actually affect the cash of a company, how much cash company has to pay. Like employee benefits, they have to pay. Purchases of stock and trade, cost materials, they have to pay. Interest, they have to pay. But depreciation and amortization expense is just deductible. All right. It's not something that actually goes out of their pocket. But in the accounting sense, it has to be deductible. Now, other expenses, a massive 63,278 million rupees, almost close to not 30%, but way more than any other expense. It's around, let's say, closer to 30% of total revenue. That's a major expense for this company. So, a net gain on foreign currency transactions. So it seems there was a gain on foreign currency transactions because it's an international company. It operates in USA, Europe. So of course, the different exchange rate of different currencies, the fluctuations in the exchange rate of different currencies like dollar and rupee will either benefit this company or harm the company. All right. The total expenses come around to 1,72,647 million rupees or 17,000 crores. Here we have the profit before exceptional items. Exceptional items, some things that can happen one off. It's a one off thing. It's not recurring again. Like a factory, like a manufacturing facility has a fire, right? An earthquake happened, the manufacturing facility fell apart. These are one offs, all right? These are exceptional. So profit before exceptional items and tax, we have 6,246 crores or 62,463 million rupees. All right. Then we have some exception items, very small. Now, profit before tax, 6,000 crores. Nice. The tax expense. All right. Here we have the total tax expense. First, we have the current tax. Current tax, the tax it has to pay for this year, of course. 20,493 million rupees or 2,049 crore rupees. Deferred tax, here it's in brackets, meaning it's actually being added. This is a positive. Deferred tax being negative, it can mean that the company overpaid its taxes or it received some kind of tax benefit, or for some reason it's receiving taxes, its money back. It's receiving tax money back. Deferred taxes being negative refers to that. Overall, overall, here we have some more things. Profit for the year before share of profit of joint ventures and all that. They had some money here from joint ventures also. Okay. So they got some profits from joint ventures. Then here we come to profit for the year. Finally, profit for the year, just below me, 4,672 crores, 46,726 million rupees. When we compare it to total revenue, it's almost equal to 20% net profit margins. Very nice. Now we have other comprehensive income. All right. This seems to be negligible. Yes. Other comprehensive income is not a very big factor. So we are going to ignore it for now. All right. So we looked at the entire statement. Okay. Now we're going to look at some of the notes of these statements. So this is the annual report. We go to 410 page of this annual report. And here for revenue from operations, we have the notes. This gives us more information. All right. Now, first, what does it give us? Sale of products. Of course, it sells products. In the under the other operating revenues, what do we see? We first see production linked incentive income. Now, production linked incentive, this is the PLI scheme of the government. You can read it right here. The group is eligible for claiming benefits under the production linked incentive, the PLI scheme of the government of India, based on the estimated claims of the submitted to be submitted by the group. The group has recognized the PLI income. All right. So 300 crores worth of PLI income basically. Then we have export incentives this company got of around, I think that's 8 crores or that's 84 crores. Okay, 847 million rupees. Then we have miscellaneous income, other sources of income, 2,830 million rupees. Fine, fine, fine. Now this is pretty interesting. All right. It says revenue as per contracted price. So total revenue the company is supposed to receive from contracted price is around 45,000 crore rupees. But you may wonder the total revenue is only 23,000 rupees. Here it says that the discounts, chargebacks, price reductions, and rebates is around 2,19,600 million rupees or 29,000 crores, 29,960 crores worth of discounts given, chargebacks, price reductions, rebates, and all of that. So this is something we also saw right now. Very interesting thing. So overall, it seems to be normal with pharmaceuticals, this kind of massive discounts chargebacks. It seems normal, nothing to be concerned about, I guess. Now, other income, other income. Here we have finance income. Here it says interest income on financial assets measured at amortized cost. What is amortized cost? Amortization is the reduction in the value of an asset, but not like a fixed asset or a tangible asset. Like depreciation is for assets we can touch, right? Like a building. But amortization is basically, from what I understand, depreciation for assets we can't touch, like a bond, digital bond, stocks. You can't touch a stock. So interest income on financial assets, and we have interest income of debt instruments. All right. Interest income on debt instruments, uh, net loss on fair valuation of SAP contracts. Basically, a lot of things here. Gain on investments monetarily measured at which is final value through profit and loss, FVTPL. So major income has been divided. Other income has been divided into finance income and dividend income. In finance income, major stuff is coming from interest income on financial assets. All right. And dividend income, the major stuff is coming from either gain on investments. All right. Gain on investments. These do not have to mean that they actually sold these investments, but can mean that the price of these investments increased and they recognize that as profit. Then net gain on sale of property, plant, equipment. They have sold some of the property, plant, equipment, happens every year. All right, all right. Now moving on, we have more notes. Now, remember that extremely massive other expenses? 63,000 something million rupees, 6,300 crores worth of other expenses. Here are the other expenses. So first, we have research materials. All right, expense on research material. We're getting material for research. 1,894 million rupees. Analytical expenses, 3,264 million rupees. Consumption of stores and spare parts, all right, 3,284 million. Power and fuel, big expense, 3,754 million. Rent, we all got to pay rent, repairs to buildings, repairs to plants and machinery, repairs to others. All right. Insurance, good enough. Rates and tax. Oh, some more rates and taxes. All right. Processing charges. Okay. Commission to directors, very small, only 26 million rupees. All right. Traveling expenses, 2,185 million rupees. Legal and professional fees, big expense, 6,905 million. I think that's like the biggest. The biggest we saw right now are legal and professional fees. All right. After that, we have advertisement expenses, 3,368 million. We have commission on sales. All right, good. More commissions, more incentive, 1,956 million. Freight and forwarding. I guess these are the transportation costs basically for transporting the goods. Freight and forwarding, 5,689 million rupees. Then other marketing expenses are 11,059 million rupees. Okay. So, and oh wow, miscellaneous expenses. So, even more miscellaneous expenses, some other expenses makes up like 20% of these total other expenses. But okay, other than miscellaneous expenses, we see a lot of advertising. Again, other marketing expenses plus advertisement, like advertisement here, other marketing here, that makes around like 14,000 million rupees, 14,000 million rupees, 1,400 crores worth of expenses. Understandable. Freight is very big. Legal and professional fees is very big. Uh, Power and fuel, consumption of stores and spare parts, analytical expenses. I will have to research or see what's that. All right. Then we have got even more expenses. Wow. Even more research material expenses. Okay, this is a continuation of other expenses. We got more analytical expenses, more power and fuel, more legal and professional fees. We got miscellaneous expenses, excluding depreciation. So even more miscellaneous expenses. All right, so you can read all of this. You can pause right now. Big, 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 big. All right. We only got a few more things to see. Okay, this is, yeah, revenue. Revenue by segments. So notes on revenue. All right. So this total revenue we saw, right? 23,241 crores. It's divided into two segments. One is the major one, that is segment revenue from pharmaceuticals, 205,439 million rupees. A big part of revenue. The biggest part of revenue comes from selling pharmaceuticals. Then the second segment is 26,976 million rupees, or 2,679 crores, 97 crores. It's coming from selling consumer products. From what I understand, consumer products is another segment. Of course, it's another segment. It can mean the medtech, it's been selling, but I have to confirm on that. But one of its segments is consumer products. Then that's the revenue. Then we come to segment results. This is the basically the EBITDA basically. All right. This is the EBITDA. Not even EBITDA, like the profit from these operations, you can consider it. Profit from these segments. Pharmaceutical makes around 58,993 million on revenue of 205,439 million. So that's around like a more than 20% margins, while consumer products has more than 10% margins. So consumer products currently seems to have lower margins than pharmaceuticals. And segment assets, how are assets divided? How many assets does it have? All right. Segment assets. Majority of it, we have 3,07,629 million rupees of assets in pharmaceuticals, 389 million rupees worth of assets in consumer products. Then we got segment liabilities, all right, 109,090 million in pharmaceuticals and a very small 7,343 million rupees in liabilities. Liabilities are way smaller than assets, always good to see. Here we can see revenue from regions. Now, first we have India, India, 92,530 million rupees, or 9,200 crores of the 23,000 crores in revenue came from India. Then, bigger portion, 11,000 crores worth of revenue came from US. All right, that's around not 50%, but close to 50%. And then from other places, we have 28,474 million rupees of revenue came, 2,800 crores, more than 10% of revenue came from the rest of world. All right. So I guess that's it. Yeah, that's it. Just to search, just to search. Let's just search a consumer products division of Zydus Life Sciences. All right. You're going to search this. Yes. If I'm correct, this should be their MedTech division. All right, I'm wrong. Okay, fine. Zydus Life Science has a consumer products division primarily known as Zydus Wellness, focuses on nutrition and skincare products. All right. We have division house brand like Glucon D, Sugar Free, Ever Youth, Complan. Yo, Complan? Nice. Who's nice? Dude, Complan? All right. So this is the consumer wellness, consumer wellness brands. Okay, of course, consumer products. So it focuses on nutrition and skincare products. All right. So key brands here are Glucon D, Instant Energy. I think I've heard of this. Sugar Free, no. Complan, of course. Ever Youth skincare brand, and Nycil, an antiseptic powder. All right. Yo, Zydus Wellness. Okay, Zydus Wellness is the company, which is the consumer products division, and it's subsidiary of Zydus Life Science. All right. Complan. I didn't know Complan. So, I guess that's it. Hope you have a nice day. Bye.